It's a big week for earnings. We're getting back to business today. McDonald's and Halliburton set to report before the bell. They are just two of the 103 companies reporting earnings this week. John Hilsenrath, what do you expect to see?
Well, I'm watching the Halliburton numbers pretty closely because we have a lot going on in oil markets and energy markets right now. We have a story in the Wall Street Journal today about OPEC cutting back production. That's holding up oil prices. The question
And OPEC is meeting in Vienna.
OPEC is meeting in Vienna, and the big question is how are producers going to respond in the United States? I want to hear what Halliburton says about that. It looks like production is kicking up in the United States, which could add supply to the markets.
Yeah. Which would be why oil prices are a little bit softer this morning. But if you look at from the OPEC and the non-OPEC oil cut deal was put in place, if you track that, the oil price from then to now, and you do so with Halliburton stock, both up about 20%.
Wow.
So it's interesting how that follows.
Nice run.
They have been. I also want to bring up McDonald's. Novelty of all-day breakfast doesn't exist anymore. You have a strong dollar that could hit them overseas. The weather, and we've seen gas prices move up a bit. Gas prices affect the McDonald's customer.
Yeah, that's a really good point. But overall, in terms of earnings growth for the fourth quarter, do you have a number on that? Are we back to growth in terms of profitability for corporate America?
I don't have a number on it, but as we're reporting in the paper today, this is a vulnerable moment for the stock market. So these earnings better be good because the market had its Trump rally, and now it is looking to see whether the economy and President Trump and companies deliver. And if they don't on any of those fronts, we could see some softening in stock prices.
Here's what I've got, John, from S&P Capital IQ, Richard Peterson. Fourth quarter 2016 growth, S&P 500, 4.4% on profits from the S&P 500. In terms of sectors, energy profits. Yep. Okay, energy down 15.8% for the fourth quarter of 16.
Let's just say 4.4%
overall for S&P.
In a market with high double-digit PE multiples, as I say, is a market that's vulnerable to a sell-off if we don't see the new president delivering on his economic agenda, and if we don't see these earnings numbers beat and not just meet expectations.
Yeah, and it's not just his broad economic agenda. It's also tax reform, which we haven't heard much about in these first couple days. And I know, Marie, you've been so on that about we have to do tax reform both for consumers and for businesses. If they don't get that, the corporation that don't lower the corporate tax rate, but then also you have to look at his energy policies, right? When we're talking about energy, because he said he's going to take the restrictions off of coal and oil, and he wants to draw out of TPP. I mean, there's lots of things that Keystone XL pipeline. I mean, energy is first up on his agenda this week as well, so I'm sure that's going to make an impact.
Art Hogan on FBN AM said in 2017 he's putting his money in technology, banks, they still have some room to run, and energy.
Yeah.
Kirsten, you talk about tax reform. That is a very, very big lift, and it's going to take months for them to get something lined up there. We had an interview with the president-elect a week and a half ago, and he expressed some reservations about very important elements of the House Republican tax plan, this idea of a border adjustment tax. So they're already at odds on some key parts of this tax
And is that going
reform.
to impact confidence, right? Confidence among businesses that, hey, we thought we were getting this tax reform, and yet maybe we're not so sure.
The market is going to be making some big judgments this week about how he's doing in his first days.
That's absolutely right. Well, here's what we think. In the first 100 days, we will know what tax reform looks like. We'll know where they hope to get. We know that Paul Ryan's at 20% corporate tax and Donald Trump is at 15%, but we may very well get details in terms of what it will look like. We won't actually see the legislation until the end of the summer, fall. Then the hope is that it's retroactive to January 1, but we don't know.
And the question is, once this thing takes shape, are they going to be able to pull together the votes to make it happen? There are a lot of competing interests at play. So, he talks about draining the swamp. There are a lot of interests in Washington that are going to be fighting for their piece of the pie.
Sounds like you're suggesting market's overvalued, even though we're down for 2 weeks, by the way. The market has rolled over in the last 2 weeks.
I think he's got to deliver very early on his agenda.
I agree with you.
So we'll have a sideways market then for the first half of the year, is what I think you're saying.
I think they're going to be voting every day on whether he's getting the work done. And and then this week the trade piece of his agenda is one of the most fraught pieces because we have to see if our trade partners push back or not.
He meets at the end of the month with both Canada and Mexico, the leaders there. And Friday, Theresa May.
And Theresa May. Okay, so let's move on to Yahoo. Dealing with an investigation from the SEC, John, Securities and Exchange Commission says that there were 2 data breaches were disclosed this past year. How big of an issue will this be for Yahoo, you think?
Well, it's an important issue for Yahoo, but it's also an important issue for the entire market. This is a test case for the SEC. Yahoo had these data breaches 2 years ago, more in 2014, more than 2 years ago.
But the disclosure was an issue, right? They didn't discuss
and then they didn't disclose what happened for 2 years after this deal with Verizon got done. So the question is, and for the SEC, the question is, did they wait too long to disclose this information?
Yeah, we'll see about that. All right, we'll hear more about that today. Still